Before we start, let me just remind you of who I am. Welcome to week 11 of our 52-week home buyer and home ownership series. I am Daphne Brown, your broker owner of Beyond the Home Realty. And I figured, there are enough people out there that want to know how to purchase a home in the right way, strategically, without making the big mistakes that most people do that can cost you thousands. So we figured there are people that want to know how to do this thing called real estate before they actually dive in. And so we said, let's put this series together so that people have these videos at their fingertips that will give them all kinds of information in regards to the home buying process without having to say, hey, real estate agent, I want to know about the home buying process, but guess what? I'm not ready just yet. Because typically, when you reach out to a realtor, they're going to want you to buy now. But what if you aren't ready? So we came up with this webinar so that we can answer the most pressing questions. Remember that if you ever have any questions or need any real estate related assistance, we're always here. Now, we've talked about a bunch of stuff in weeks 1 through 10. And if you want to know what we've talked about thus far, feel free to join us over on YouTube because we have included those videos in a playlist over there. I will leave a link so that you will be able to check those videos out. You can always reach out to us at any time to ask any questions about real estate. So today we're going to jump into it. Week 11, week 11. Today is where everything comes together. Weeks 1 through 10 is coming together. And this is the moment where you go from watching homes on your phone, on your computer, in magazines, into actually purchasing one. And my goal is to show you how to do just that in a strategic way, not emotionally and definitely without overpaying. So first, we need to prepare for the mental shift because it's speed versus haste at this point, and we are trying to help you prepare for the mental shift to understand the two because there is a big difference between being fast and being reckless. Fast equals prepared, but haste, you may have some emotions involved, and we do not want you to be emotionally led with this huge purchase. In this market, hesitation may cost money, but rushing without a plan will definitely cost money. By the time we get to this point, you already know your must haves. Just because in weeks 1 through 10, we've prepared you, that information allows you to move quickly with confidence and not pressure. So, we want to start off with the 80-20 rule. We know that there's this supposedly 80-20 rule in relationships, but there's an 80-20 rule when it comes to real estate as well. If a house meets 80% of your needs, it's a house to be considered 100% of the time. Right now, we help you build your must have list in week 9 so that today in week 11, you can pull the trigger with confidence once you find the home that you like. So, going back to that 80-20 rule, you have to stop waiting for perfection. No home is going to check 100% of your boxes. If it checks 80%, though, that is considered a win in real estate. The last 20 is typically cosmetic or upgradable things that you can figure out over time as you live in the home. You wait for perfection, you're going to be renting forever, or you're going to overpay chasing perfection. Okay. The golden ticket here, the golden ticket is going to be pre-qualification versus pre-approval. And there is a huge difference. A pre-qualification is basically you telling the lender your story. My name is Daphne. I make X amount of dollars. I've been on my job for X amount of time. I have these debts. I have this much money saved up, and here are my credit scores. You're telling them that, okay? And so you're telling your story. If you are just exploring homes, thinking about what if, thinking about maybe I'll pull the trigger, you want to have a pre qualification. It's quick and it requires very little paperwork. And it gives you a rough idea of how much money you may be able to borrow for your home. But it's also surface level. It's a surface level look and it's based on, again, what you tell your lender. All right. So I'm telling you. Now, a pre approval, that's showing. That's receipts. Do I need to bring the receipts? Okay, if you know, you know. Mariah from Marriage Medicine. So a pre-approval is receipts. It's verified income. We're verifying what you've told us. We're verifying your income. We're verifying your credit scores. We're verifying your assets. We're verifying your down payment. We're verifying all of those things. At least a lender is. So if you're serious about buying soon, this is a great indicator of that. So again, don't tell me, show me. And showing me is getting a pre-approval. So you always want to aim for a pre-approval to strengthen your offer because pre-approvals are more powerful. The lender has checked your actual documents and can back up a loan amount with receipts. So again, a pre-approval is better than a pre-qualification. However, most people start with the pre-qual, and that's fine as well. If we are in a market that is very competitive, I advise my clients to get a pre approval. It's a deeper dive as opposed to the surface level pre qualification. The lender has verified everything, again, your taxes, your pay stubs, your credit, all of the things. A pre approval letter with a verified underwriting status is almost as strong as a cash offer. That is how you win. Tells the seller, if you're buying a resale, or the builder, if you're buying new construction, that you are a sure thing. And again, in a competitive market, buyers with pre approvals often stand out to sellers and builders because the loan is already verified. Only thing we're waiting to put into the equation is the property. Okay. Now, the power move again is underwriting. You want to get underwritten, and that is your pre approval. It's how you compete with cash. So when your file has already been underwritten, you remove uncertainty for the seller. The seller risk goes down, and listing agents trust that deal more, and it moves your offer to the top. This is one of the biggest competitive advantages that we help our clients secure because now we can have a conversation with the listing agent that says, "Oh, okay, well, you got a couple offers. Okay, well, we're good as golden because this file has already been underwritten. We're just looking for a property that qualifies, right? Or if we are looking at a home and we're really trying to get a huge discount for a property that we know they want to sell, whether it's an individual or whether it's a builder, we can say, I know you guys offer your fake preferred lenders, but we have an outside lender and this buyer has already been underwritten. It lands softer. Okay. So that way we can typically negotiate a better deal to where we can get you more buyer incentives. Okay. So always better to be pre approved, which means your file has already been underwritten. Now, the recon call, this is where we capture all of the intelligence. We want to know about this property. And this is where most agents drop the ball, but not your homegirls at Beyond the Home Realty, because once our buyers have found a property, we don't just submit an offer, right? We want to know, let me turn my fan off. We want to know how to best get our offer, how we can get it accepted, right? We want to know what is the way to make this offer shine. So we gather intelligence. We ask questions like, hey, listing agent, why are the seller selling? Have you guys received any offers in the past? Are you working on anything right now? What's the seller's ideal closing date? And what would make this a smooth deal for the seller? This happens behind the scenes. These are things that people don't see, right? You see on social media, offer accepted, you buyer happy, going to closing, past inspections, all those things, but you don't see the behind the scenes. And this is some of what's happening behind the scenes. We call and we ask again the listing agent, okay, girl or guy, because I try to make everybody my home girl or homeboy. What does the seller actually need? Before we write a single word on that contract, before a single number goes on that contract, we want to know this, okay? We want to know, is this just about price, or does the seller need a fast closing? Are they being transferred, for a job? Did a death happen in the family? Is it a birth? We find out all of these things so we can figure out how to best craft an offer. Does the seller need a lease back? Do they need to move out slowly? What is the deal? So we don't just offer money on an offer, we offer a solution to the seller's problem. This makes our offer the most attractive without necessarily being the most expensive. So if a home is listed at 300,000, we don't necessarily have to come in at 300,000 depending on the market, on a whole bunch of other variables. But this helps us determine what is needed. So the offer strategy again is solving the seller's problem. We are the problem solvers. The best offer, like we said, is not always the highest. If a seller needs time and you offer flexibility, you more than likely beat a higher offer. Some examples of those things will be a lease back. Okay. So, like we said, maybe that seller needs a little bit more time to get out of the home. And in most cases, most loans are going to require you to take possession of the property within 30 days. So guess what? You have that time. Now, if we do a lease back, we're not saying we're doing it for free. No way. No, ma'am, Pam. We are saying that we'll give you time to move out, but you're going to have to pay for it. Okay. That's negotiations, part of the negotiations component of it. But it also means for the buyer that you don't get possession of that property immediately. Okay. You have to wait until they're out, but you do get a deposit to make sure that the home is in the shape that you want it to be in, so that when you move in, you don't have these big issues now, right? Other examples are a flexible closing. If the seller needs, they're getting a transfer and they need money from this sale to go purchase another home, maybe they have to do that before. So maybe they only need, a week lease back. We offer those solutions to their problems, and fewer contingencies also will help with that. We position you as the easiest buyer to work with. That does not mean we're going to be pushovers, because we're not. But we position you and show you to be the easiest buyer to work with. Now, the big three: when crafting your offer, you got to think sales price, earnest money, and option fee. So the sales price, again, we're not going to walk in and be like us. We always caution our buyers, please, with the cameras and everything being recorded nowadays, if you like the home, give it a good old, snub, like, okay, I see it. Don't forget, we got to go look at that other house, right? We play coy like that. And then when we get away from the home, away from the cameras, now you can jump up and down and all that, but we're still going to be cool headed and try to keep your emotions at bay and deliver to you the data that shows the comps for the area. Because we are not going to what? We're going to ensure you don't overpay. We're going to make sure you do not overpay. So we're going to say a home similar to this in this area has sold for, in the last 3 months, in the last 6 months, fill in the blank. I'm going to show you the comps. So again, you're not overpaying, but then also, so we have the best opportunity of this home appraising. All right. Now, again, we talked about earnest money in previous weeks. It's typically 1% of the sales price on resales. On new construction, it could be anywhere from $1,000, I'm sorry, $1 to 5, 10, $15,000, or a certain percentage of upgrades. It really just depends. Then there's the option fee. Again, that buys you time and control. Control. Never gone. Okay. So here is our earnest money strategy. This is one of the most misunderstood tools. It's not extra money being thrown away. It goes towards your purchase, right? So you're not just putting that money out there and you'll never see it again. You will be credited if you were to move forward in the transaction. You're going to be credited with that earnest money that you've already put down. So you're not risking more money, you're signaling strength. Now, here's the option period deep dive. What is it? It's a negotiated number of days where you have the unrestricted right to terminate the contract. This is your pause button, okay? Because you can walk away for any reason during this option period time. You can wake up one morning on, a different side of the bed and go, let's go look at the house. I saw where the sun was hitting the house. I don't like it. It's going to be too hot. I want to walk away. You can wake up one morning and say, I got a headache. I don't want the house. I'm going to walk away. You can walk away for any reason during your option period. And this is where risk is reduced because this is where we verify everything top to bottom. We get the home inspected by a general home inspector. And then if there are issues, like maybe there's a roof issue, or maybe there's an HVAC issue, or sewer foundation issue, whatever, we get those specialists out, but we also get an insurance quote at that time to make sure of a couple things, which we'll go over. So it is our time to do our due diligence. Here is your due diligence checklist. Okay. So this is where you go from excitement to investigation. All right. So your inspection, again, this is your general home inspection where you bring in a licensed inspector to evaluate the home from top to bottom, roof, foundation, plumbing, electrical, HVAC. I'm talking about all of it. Most homes will have issues. That's normal. Even new construction homes will have issues. Our job is to identify what's major versus what's minor. Now, if there are issues, like I just said in the previous slide, with any of the components, HVAC, foundation, roof, plumber, electrician, whatever, we'll get those specialists in during your option period to check and give us a better assessment of those components. So if the main inspection shows concerns, we're going to bring in those specialists because we don't guess. We want the experts to tell us what's going on so you can make a more informed decision. As I just spoke about insurance. So before we move forward, we also check for insurance because what you don't want is to fall in love with a home, but it's too expensive to insure. And homes with older roofs, believe it or not, have higher insurance premiums. Homes that have flooded before or in flood zone A or flood zone AE will have higher insurance premiums. And then we also check for claims history. A home isn't just about the mortgage, it's about the total monthly cost. So we want to make sure we get all of those things done. And then the last component of your due diligence checklist is the property condition. So at this point, we're looking at the full picture. We're looking at the condition of the home, the needed repairs, the long term value, and the insurance. This is where you decide if you're going to move forward, if we're going to negotiate some things, or if you're going to walk away. We're confirming that this home is a smart investment, not just a pretty home. So during our due diligence period, our option period, there are three things that can happen. You can move forward with the home as is, with everything that you found out about it in the inspection period. You can negotiate repairs or credits, or then simply walk away. And because we've protected your earnest money and we've talked about it in prior weeks about the timelines, we make sure we hit all of our timelines because we want to protect your earnest money. So, with the earnest money protected, you can just say, you know what, I don't want this. I'm going to walk away. Maybe there's a better home out there for me. Okay. Now, during the inspection period, what you can expect is no home is perfect. You can expect that home to be imperfect. Okay. So, I'm going to say it again, no home is perfect. The minor issues that you find in homes are normal. The bigger issues are negotiable. That's on resales. On a new construction home, the big issues We want them all worked out. Okay. Most homes will have issues, but our job, again, is to verify what's major versus what's minor. And we do that with a home inspector and a specialist if needed. All right. And we use that home inspection with all of its pages as a tool, not a weapon. So, whatever we find, and I'm telling you, if it's a resale, you're going to have lots and lots of things found in that report. But we're not going to send the full report over to the listing agent and demand that they fix everything. We're going to focus on the major items. We're going to be reasonable if you want to keep the deal alive. If it's a new construction home, we want to fix everything, okay? Because it's a new home. All right. Now, to simplify the contingencies, you're going to have a financing contingency, an appraisal contingency, and a title contingency built into your contract. For your appraisal, if you're getting a government loan, like a VA loan or an FHA loan, that has an appraisal, and that there's a section in the contract that has the appraisal contingency built into the contract. If you're paying cash or getting a conventional loan, we'll have to do an addendum to protect your earnest money from a low appraisal. Okay. So the financing contingency is if your loan doesn't go through for whatever reason. The appraisal contingency is there if the home doesn't come back at value at the sales price you're paying for it. And the title contingency ensures that there are no surprises attached to the deed. For example, there were never any contractors that did any work and they weren't paid, and now they filed a lien, right? So basically, liens. It's free of liens and it's free and clear to be sold on the open market. That's what that is. My job is to make sure, again, that your earnest money stays protected and in your pocket if the deal isn't right. So, again, we just told you, but we're going to say it again because it's worth repeating that there are three things that can happen during the due diligence period: moving forward with everything known and found out about the home, negotiating for repairs or credits, or walking away. And you can keep your earnest money, okay? So you can walk away. Ooh, don't, but you may need to, all right? So now, when it comes to the inspection, repairs versus credits, which one wins? Well, me personally, as a real estate broker, I prefer credits. As a buyer, I prefer credits. As a seller, I want to get it done for you, right? And here's why. So, with the repairs, the seller controls the quality. Okay. With the credits, the buyer controls the repairs and the possible cash flow. So, for example, let's take, for example, there's a property that has, 8,000, that has a roof that needs work. And we contacted a couple of contractors. I always suggest at least three, getting three quotes. And they told us it's going to be $8,000 to get the roof where it needs to be in the condition that it needs to be. So instead of fixing the roof, if it will pass your lender, right? If it gets past the lender, because sometimes there are lender required repairs that have to be fixed before closing. But if this is something that can be closed and we can fix it later and come back to it later, then I would suggest getting a $8,000 credit, okay? Because you, the buyer, gets to choose the how and the when. On repairs, sellers handle it, but if they handle it, they get to choose the contractor, and the buyer doesn't control the quality of the work. Because let's face it, when you are under contract and there's work that needs to be done, there are repairs that need to be done to the home. In most cases, they're rushing to get that stuff done. They're rushing before closing because we got a deadline. So it may look, but it may not be done right. It's like, is there lipstick on a pig here, right? But on credits, the buyer stays in control. They choose the contractor, they choose the quality of it and the timeline. So maybe, I got money for this roof, but maybe it doesn't, maybe it has a little life left right now. I don't have to do it now. I can use that money somewhere else. you definitely win in that case. But you can also shop for other contractors and maybe get better pricing. So that's when we talk about cash flow. That money can help in other areas. So again, I always suggest to my buyers that. Now, so instead of fixing the roof, we'll negotiate $8,000 in credits. Um, and you get to decide who installs it. You get to decide when it's done. You keep control of the money. Credits give you power. Repairs give the seller control. So credits give the buyer power. Repairs give the seller control. This is one of the biggest negotiation strategies that we use for our buyers. A lot of people think, oh, just have the seller fix it, but that's not always a good move. And again, I will tell you that if that happens when the seller's doing the repairs, the goal for them is to spend as little money as possible. I want to satisfy, this on the contract. I don't need to spend a lot of money. It don't necessarily have to be the best quality because I'm selling this home and I'm done. But with credits, the buyer is in control. They pick the contractor, they control the quality, and they decide when the work gets done. My job is not just to get you the house, it's to make sure you win after you move in. All right. Now, anybody can write an offer, but not everyone knows how to negotiate you into the best position. And this is where I protect you the most as your realtor. Okay. Again, write an offer. Chat GPT is writing offers around here, but we want to protect you and make sure that things are favored in your direction. All right. Now, next week, we're going to talk about the good old inspection reports. So we just talked about that could be 40 pages, 70 pages, 120 pages, but we are going to go through inspection reports. We're going to tell you and show you what happens at inspections so you know exactly what to look forward to, because sometimes people get scared about that, get nervous about that, but it's not a big deal at all. It's like a puzzle. You put the little pieces together on the outside first, and then you start putting the pieces on the inside till you got a good complete puzzle. So that is coming up next week. Do we have any questions from anybody in the peanut gallery? Ladies, any questions? Hey, okay, all right. Oh, let me see. Hold on. I got a chat, and the chat says, oh, hold on. Let me see what the chat says. Lord, where's the chat at? Hold on, because I lost my chat. Hold on. Chat. Oh, the chat says same. All good. Okay, perfect. Okay. So this is going to drop on YouTube on Sunday. So you can rewatch that if you have any questions. Don't forget, you can always reach out to us, calling us, texting us, emailing us. Our contact information will be in the link of this video description. And remember that for all of your real estate needs, we are always ready and willing to enable you to find your way home. Till next time, next week, week 12. Bye.
Want to catch up with our past webinar Wednesdays? Did you miss something? Would you like to see something again? Well, you are in luck. We've created a playlist that you can start binge watching right now.